Welcome to Oregon Cash Flow Pro. My name is James Barber. Always here to help you maximize your cash flow. How's everybody doing? Let's see if we can get these comments over here. Eric, how you doing? All right. So today, whole life, live illustrations, and/or policy reviews. We happen to be doing a policy review today. My Mass Mutual policy is just about to renew. So this time, rather than doing the update after it renews, we're going to take a look at it right before it renews. Okay. So let's take a look at this. I started this policy, this Mass Mutual policy in 2019, I believe. Yeah, I think it was 2019. By the way, if you guys have any questions, if you are interested in seeing some kind of illustrations, whole life illustrations, put them in the comment section. That's what today's for. Today's to help you guys. I'm going to share my stuff today because I haven't had any suggestions yet and my policy's rolling up. On Tuesdays, we do IUL live stream for illustrations and policy reviews. This next Tuesday, we're going to have a policy to review that somebody sent us. If you have a policy or an illustration that you would like me to review live on air, send it in to me. You can see the information. I think I've got it right here, scrolling along the bottom. And on Thursdays, we do whole life. So Tuesdays, IULs, Thursdays, whole life. Our goal is to just bring you guys the maximum value that we can with this channel. And of course, if you want to meet with me, that link is right there as well. All right, so my policy, let me see if I can share. Oh, let me make this bigger. First, let's bring this over. All right, let's move over here to this screen. And let's share. I can't tell which one it is that I want to share. I've got multiple screens here. All right, let's see. Is that this one? All right, that was the right one. All right, so what we're looking at here, this is my original illustration. I actually saved it for this policy. So this is my Mass Mutual one. Let's take a look down here at the bottom. Here's the date, 2019, July. We've got a MEC limit of 14,077, but my plan, for some reason, I'm just putting in 13,000. Okay, so the death benefit determines the MEC limit. When I designed it, I just didn't tighten it up as tightly as I could. I could have reduced the death benefit by a little bit, and that would have reduced our MEC limit down to the amount that we're putting in, which was 13,047, but I didn't do that. Instead, what we ended up doing was we increased what we were putting in last year. So we've been putting in 14,000 instead of 13,000. So I always like to do that, leave a little bit of MEC space. If we have the ability to add additional funds, we've got the space to do it without having to start a new policy. Okay, so what we're looking at is 13,000 going in. You can see our year one cash value. We are at the end of year 4. We're at the end of year 4. So you can see with our original plan, end of year 4 should be 50,882. Okay, yeah. So 50,882. We are just about to the end. So notice this says end of year values. We're not quite at the end. What the end means is you're going to get your dividend payment credited. So at any point up to that, we're going to be less than what the total is at the end of the year. So it's always hard because we pass over to the new year and we put in our new money. And so we really never have a chance to look at these actual numbers to see how they're going to compare. So the closest we can get is like right before it, Or we look right after it, subtract the money we just put into it. But then we also have next year's expenses that came out. So it's a little bit complicated to basically see how we're doing in real time without doing an in-force illustration. So we've put together an in-force illustration. We've got some challenges with that because I do have loans out on this account. And so that kind of screws up what we're looking at for the end of this year. So we're not going to be able to compare the end of this year. So what we're going to look at is how it's going to compare in the future years after that. So year 5, 6, 7. The dividend rate is still the same as it was when we started our policy, 6%. It's been basically holding steady. But how Mass Mutual credits it is just a little bit different. I think it's slightly adjusted. So they have a net, or they have a gross dividend rate, and then you have an actual rate that's contributed to your particular policy based on a number of different factors. And when I replay this video, I'll say, check out, I'm going to link to a video that talks about dividends and how they work and how they might get adjusted for any individual policy. All right, looks like my software is having some problems with the green screen here. Hang on just a second. Matt, hey, how's it going? And Danny, how's it going? Matt says, here, let's see if we can show this. So starting year 4, is it true you could start adding 10% additional AILR? That was when I added my 10% additional AILR, but that brought me right up to the MEC limit. So we're going to take a look. We're going to take a look at the in-force. So I haven't seen the next year if I have the ability to add more to the AILR. We're going to take a look at it though, because if I can, I'll probably end up doing it. Generally, anytime I can add additional funds to my policies, I try to do that. And then Danny says, what software am I using for my live stream? So right now I'm using EVMux. That's EVMUX. And in addition to that, I'm using some stream elements. So stream elements is giving, it's what gave us our countdown. It also will give us alerts. So if somebody subscribes to the channel, it'll pop up an alert. I used to use OBS. What was it called? Streamlabs OBS is what I used to use last year and the year before that when I did my live streams. But OBS uses so much resources. My computers had a hard time keeping up with it. And so we would end up with delays and whatnot. I switched to, what was the name of that one I switched to? StreamYard. I switched to StreamYard for a while, but I get a little more functionality out of EVMux and I get a higher resolution. I get higher resolution offering, and now it has the ability to connect to this stream elements, which gives us a lot of the features that OBS offers. All right, let me fix this. There we go. Can't stand these green screens sometimes. It's not the best green screen software. Okay, so back to my policy, and feel free to keep dropping comments in there. We'll try and keep up with them as they go. So this is the original illustration. Let's bring in our in-force illustration. So here's our in-force illustration. Let's take a look at the bottom. What gives us the date? So I just ran this just a little bit ago. You're welcome, Danny. So ran that a little bit ago. It doesn't give us our MEC limit here anymore, but you can see we're putting in 1477. This is the plan. So we increased our AILR last year, and it's going to hold steady. Now, I'm going to get a letter from Mass Mutual here in the next couple of weeks, and it may give me the ability to increase that again. We'll find out. It might not, because I'm already at my MEC limit. So I imagine, Matt, what you might be referring to is maybe if your policy started out with a higher death benefit originally, you can start adding 10% per year, because that's one of Mass Mutual's limitations. They don't let you just throw in premium funds whenever you want on an unscheduled basis. You're limited to adding it on your anniversary and you're limited generally to a 10% increase. You have some ability to catch up on some missed PUA payments, but for the most part, they're pretty strict. Can't adjust a whole lot. So because I have a loan outstanding on this one, we're looking at, this doesn't show it, year 4. Let me go to a different page. Here we go. So we can see I have to illustrate a loan payoff, or it kind of screws everything up. You can see there's a total outstanding loan. So just recently, if you recall, I was collateralizing my cash value outside of this policy with Bancorp because of the Fed raising their rates seemingly every single month. The rate that I was offered from them went from 3.25% up to 6.5%. And I'm sure it's a little higher now. So I got out of that because my loan with Mass Mutual is 5%. My loan with my Guardian policies is 6%. And so I was combining all of my whole life policies into that line of credit. I pulled that back out and I basically maxed out this one because it was lower than my Guardian one. So the way that I look at where I want to have my equity and where I'm going to have my loans is when I pay a lower interest rate, that's where I'm accessing my equity. So we maxed out this one. We didn't max out our Guardian policies. Eric, you have a meeting with your agent about increasing PUAs. You have a feeling the issue will be you don't have LISR. You don't think they'll allow you to add much due to limited flexibility. Yeah, it's likely. I mean, I would guess that's likely the case. You might have some flexibility, though, because you do have a term rider attached to your policy. So I'm interested in finding out. You'll have to let me know what you find out. Okay, so you can see we had a loan. We have a loan outstanding. And then I put in that we're going to pay it off. But I wasn't able to put it in that we're paying it off in year 4, probably because we're already at the end of year 4. Like I have like less than 2 weeks or right at 2 weeks before my policy renews. So when we look at our cash value, we see our cash value here of 1907. If we add in our loan to that, though, we get a total of 50,907. What was our cash value supposed to be? 50,882. So we're kind of right on with that, but I added an extra 1,000 last year. Remember, I added an extra 1,000 on my LISR or my AILR, one of the two. So we're running a little bit behind schedule for some reason. I don't know why, other than Mass Mutual kind of applies the dividends a little differently. Even though we're seeing the same dividend, it gets applied slightly differently in any given year. Like I said, that 6% they announced, that's a gross dividend rate. It's not a net dividend rate. Now, if we look at year 5, we're projected to have 67, but I'm going to have put in $2 extra $1,000, right? Oh, let's see. Do I have a total outlay? This does not. Let me see if this gives us a total for our net outlay. I don't think this illustration does. It's just giving us our beginning outlay. And I don't need all that loan info. Yeah, there's not, it doesn't give us the total. Let me look over at my policy online. So I should be able to look up what my total basis is on my policy. this isn't showing me. I saw it just recently. Where is it? I remember seeing it just recently, but I got to find out where it was. Mass Mutual's website is not the easiest thing to. Oh, I think it was in here. Cost basis 53,216. So my cost basis is 53,216. And so we're not quite break even after year 4. Let's go back to page 7. This doesn't include the loan payoffs. That page doesn't do us much good. Here we go. Okay, so net cash value at the end of the year, if I put in another 14,000 this next year, if my basis is 53, we're going to be right at 67. So we're going to be just about breaking even right here in year 5. Just about breaking even in year 5. We're just under it. We should break even the following year. So we'll go up by, according to this projection, 15,000 that year, and we're going to put in 14. So we'll break even in year 6. My original illustration had us breaking even. Let's see. We're at 52, 65. Wait, my original illustration has breaking even in year 5, but just barely. So it looks like we're just under that. I don't know what the reasoning is. I do pay my interest on my loans. Anytime I have a loan on my policies, I do pay that interest each year. So that's not compounding and impacting anything. With Mass Mutual, we have a non-direct recognition policy. So it doesn't change what gets applied for a dividend. But we're running pretty close to the illustration. I would rather be outperforming it slightly, but just underperforming it by a little bit. That's not that big of a deal. Like, I'm going to be pretty happy with this policy. We're breaking even almost at exactly the time we expected. And ultimately, I'm going to keep funding this thing as long as I can. And we're going to have a decent amount of cash value by the time we get to retirement. 500 grand. I'm good with that. I'm good with that. This is also what we use for our Infinite Bank, this and our other Guardian policies. So we have access to this cash, obviously, for investment needs. I don't just use it for anything. We generally want to use this for cash flowing assets or other things like that. Okay. But basically, I just look at our cash value and our whole life policies as a line of credit. I'm going to treat it like every other line of credit I have. What's the rate of it? Doesn't make sense to borrow from it. If I need money, I don't have cash because I don't generally sit on cash. I either sit on equity in my home equity line of credit or equity in my policies or both. If I have too much cash sitting around, well, we've designed our policies so that's not going to be the case for a while. If it gets to that point, I get another policy. I always want to be utilizing lines of credit. So that's part of our dynamic banking process, right? I highly recommend you check out those videos if you're unsure of what I'm talking about there. But as part of our dynamic banking, we utilize lines of credit all the time. We always want to have some balance out on those. And then we do our paycheck parking, offsetting interest, so that we're not just sitting with cash in our checking or savings account. That's the goal. Any questions about this policy? I think that basically told us everything we needed to know. You can see here, the only thing that went up is our scheduled Ailer payment. This was our original illustration, remember? 10.3. And our Ailer went up 11.33. Oh, so I guess I'm putting in 1,300 more. No. 10.3 to 11.3. 1,030. 1,030 in addition is what I added to it. Other than that, everything else should be exactly the same. 1288.25, 1458.31, 1288.25, 1458.31. We've got our base coverage. Now our death benefit, let's see how the death benefit's faring. We didn't look at that. So death benefit by year 6. All right, let's go year 5. Those numbers are fairly accurate. So 478,079. Our actual 483. So we do have a higher death benefit than originally projected. So we're underperforming slightly on the cash value, but we're overperforming on the death benefit. That's cool. You can see here at this year, it's slightly overperforming. 336,729, 3. Oh, wait a minute. I'm looking at the wrong ones. Here we go. This one's 443, but we have a loan outstanding. We can't really look at this here. The loan, remember, 49,000. If we added that in, if we add that 49, because this death benefit assumes it's going to pay that loan off. This is the net death benefit that goes to your beneficiaries. So if we add 49,000 to that, because that's the current loan balance, there's like $200 in interest, but 49, that gets us up to 445. So we are a couple thousand ahead of the original illustration. I like that. So there is a small trade-off. I'm a little less cash value than we anticipated, but I'm a little more death benefit than we anticipated. So that's cool. I'll take it. That extra death benefit likely coming because we increased that dealer. And what's the difference going to be down the road? So by 20 years from now, or policy year 20, let's go policy year 24. So this will be 20 years from now. 1.137. And this one's at 1.108. So 25,000 more than the projection, which is basically what I'm paying in on my Ailer. $1.08 to 1.37. No, no, that's 29,000. So it's a little more. It's still a little more than what we've been adding in for our Ailer. My math is a little rusty here during these live streams, apparently. So I'll just scroll through this. You can take a look at it. See if there's anything interests you. Pause the video if you need to when you're rewatching this thing. And if you have any questions, put them in the comments section. I always answer every question still that you guys leave. Yeah, there we go. So that's it for my policy. Is there anything else you guys would like to see today? If you got any questions, if you've got any suggestions, maybe something that we'll do in the following weeks. Otherwise, I'm going to start thinking about what we're going to do next week. If we don't get a policy review, or somebody else sends us an illustration that they got from somebody else that they would like me to review, see if we can improve it, because I would love to do something like that online. Then I think next week we'll play around. What did we do last week? We did Mass Mutual policy review. We did another Mass Mutual policy review. I say we hop into Guardian. We'll probably look at doing some Guardian illustrations. Oh, we did my Guardian policy review. We did my Guardian policy review. Let's look at Penn Mutual next Thursday. Next Thursday, we'll look at Penn Mutual. Unless somebody sends us something, because I'm going to prioritize that ahead of it. But if you guys show up and you're in the comments and you say, hey, can we take a look at this? We'll try and do it during that live stream. Sound good? All right. Well, we'll go with that then. So I appreciate you guys being here. We're going to end this live stream unless you got any last questions to put in. How do you submit a policy for review? Once again, send it to my email, James at OregonCashFlowPro.com. Eric, you've been struggling learning pen illustrations? Okay. Well, there's only so much that I can do in these live streams. I can show the illustrations, but I'm not going to be able to show you like how to do the software from the companies, because they don't like to have that stuff out for the public consumption. That's like financial professional use only. So I suggest you you should be able to just get with your regional rep, and they will show you everything you need to know about the illustrations. And if you can't get good answers from your rep, let me know. I'll get my rep to reach out to you. But each region has their own rep, and that's their job. Their job is to show you how to do that. My rep was very helpful in helping me learn how to do it, because every company has different software. There's different tweaks that you need to do to optimize it. And yeah, so he was able to help me out with that one. So I'm happy to help out as much as I can, but you definitely want to reach out to your rep for things like that. All right. Well, with that, I'm going to say have a great week. Enjoy your weekend. Hopefully we'll start to get some decent weather coming out. I know here in Oregon, it's still rainy. I'm hoping it becomes sunny soon so we can get some work done outside. But it also helps to motivate me when I see the sun. So we'll be back again on Tuesday for IULs. Hope to see you then. And then next Thursday, let's look at Penn Mutual. All right. Take care, everybody. And we'll see you later. You're welcome, Eric. Have a good one.